Something terrifying is happening in the global financial system, and almost nobody is talking about it in the mainstream news. We are watching the greatest fire sale in history, but it is not happening at a department store. It is happening in the bond market. For decades, the United States had a golden ticket. We could print as much money as we wanted, and the rest of the world would buy our debt. It was the ultimate privilege. But right now, that privilege is ending. The biggest buyer of American debt, the factory of the world, has stopped buying. In fact, they are selling. China is dumping US Treasuries at a record pace. They are getting rid of them like they are toxic waste. And if they continue at this speed, the consequences for the American economy, for your mortgage, and for the value of the dollar in your pocket will be catastrophic. We are looking at the end of an era and the beginning of a financial crisis that could make 2008 look like a warm-up act. Welcome back to George Vance Live. We are the channel that cuts through the noise to tell you what is actually happening with your money and the world economy. Today, we are investigating the divorce of the century, the breakup between the US dollar and the Chinese central bank. This story is moving fast, and the implications are massive. Before we connect the dots on this trillion-dollar mystery, please do me a quick favor. Go ahead and hit that subscribe button and turn on notifications right now. We are building a community of critical thinkers here, and I don't want you to miss the updates we have planned for the coming weeks. It really helps support the channel. Now let's dive into the data that has Wall Street terrified. To understand why this sell-off is such a big deal, we have to go back in time a little bit. We need to understand why China bought all this debt in the first place. For the last 30 years, the relationship between the United States and China was like a marriage of convenience. It was simple. China produced cheap goods, sneakers, electronics, furniture, and shipped them to America. Americans bought these goods with US dollars. This meant that China ended up sitting on a mountain of American cash. Now, China couldn't just spend that cash in China. They couldn't pay their local workers in dollars, so they had to do something with it. They needed a safe place to park it where it would earn interest. So they turned around and loaned it back to the US government by buying US Treasury bonds. It was a perfect loop. We bought their stuff, they bought our debt. This kept interest rates in America super low. It allowed the US government to spend more than it made, and it allowed American consumers to buy cheap goods on credit. It felt like a win-win. China built its economy on exports, and America built its economy on debt. By 2013, China held over $1.3 trillion of US debt. They were our banker. But as we all know, when you owe the bank a little money, the bank owns you. But when you owe the bank $1 trillion, you own the bank. Or at least, that was the theory. So, what changed? Why is China suddenly throwing these bonds into the trash? The turning point wasn't economic, it was geopolitical. And it happened in February 2022. When Russia invaded Ukraine, the United States and its allies did something that shocked the financial world. They weaponized the dollar. They froze hundreds of billions of dollars of Russia's foreign reserves. Basically, Russia had money sitting in Western banks, and overnight, they couldn't touch it. This sent a chill down the spine of every leader in Beijing. The Chinese Communist Party looked at that and realized something terrifying. They realized China's $1 trillion, just like they did to Russia. That was the wake-up call. The Chinese leadership realized that holding US debt was no longer an asset. It was a liability. It was a vulnerability. And that is when the strategy shifted from accumulate to liquidate. Here on George Vance Live, we look at the charts, and the charts don't lie. The selling has been relentless. China AS holdings of US Treasuries have dropped from over $1.3 trillion down to around $770 billion. That is a massive reduction. They are shedding hundreds of billions of dollars worth of American bonds. And they aren't just selling the old ones, they are refusing to show up to buy new ones. Think about what happens when the biggest buyer in a market walks away. Imagine you are selling a house and you know there is one billionaire buyer who always pays full price. Suddenly, that buyer disappears. What happens to the price of your house? It crashes. In the bond market, when the price of bonds crashes, interest rates skyrocket. This is simple supply and demand. The US government is issuing more debt than ever before, trillions in deficits every year. We need buyers, we need someone to soak up that supply, but China is saying, no thanks. This leaves the US in a desperate position. If China isn't buying, who will? The Federal Reserve? They are trying to fight inflation, so they can't print money to buy bonds. Domestic investors? Maybe, but they will demand a much higher interest rate to take the risk. This lack of demand is putting upward pressure on yields, and that is the silent killer of the US economy. But there is a deeper layer to this. It's not just about safety, it's about power. China is actively trying to end the dominance of the US dollar. They call it de-dollarization. For decades, the US has used the dollar as a diplomatic weapon. If we don't like what a country is doing, we sanction them. We cut them off from the global banking system, which is run on dollars. China is tired of living under that threat. So they are building an alternative system. They are trading with Russia in yuan. They are buying oil from Saudi Arabia and paying in local currencies instead of the petrodollar. They are expanding the BRICS alliance, Brazil, Russia, India, China, South Africa, to create a trading bloc that doesn't need the United States. Every Treasury bond they sell is a vote of no confidence in the American empire. They are systematically unplugging themselves from the matrix of the US dollar, and they are encouraging other countries to do the same. If this trend continues, the demand for dollars globally will shrink. And if demand shrinks while we keep printing trillions, the value of the dollar will collapse. You might be asking, okay, if they are selling US debt, where are they putting the money? This is the most telling part of the story. They aren't buying euros. They aren't buying Japanese yen. They are buying the oldest form of money in the world, gold. The People's Bank of China has been on a massive gold buying spree. For 18 consecutive months, they added tons of gold to their reserves, and those are just the official numbers. Many analysts believe the real amount is much, much higher, hidden off the books. Why gold? Because gold is the only asset that is not someone else's liability. You can't freeze gold if it is sitting in a vault in Shanghai. You can't sanction gold. It is the ultimate insurance policy against the collapse of a paper currency. By swapping US debt for physical gold, China is hardening its economy. They are preparing for a storm. They are building a financial fortress that can withstand sanctions, war, or a US dollar collapse. It is a defensive move, but it looks a lot like preparation for an offensive one. They are cashing out their chips at the American casino and taking the money home. Now, I want to address the title of this video. When we say the end of America, we don't mean the country is going to vanish off the map. We mean the end of the financial version of America that we have known for the last 80 years. We are talking about the end of the exorbitant privilege. For your entire life, America has been able to live beyond its means because the world needed our dollars. We could run massive deficits, fight expensive wars, and have cheap mortgages because China and Japan subsidized us. If China stops playing that game, the subsidy ends. What does that look like for you? It looks like structurally higher interest rates. The days of 3% mortgages are likely gone forever. If the US government has to pay 5% or 6% or 7% just to borrow money from the market, you'll have to pay 8% or 9% or 10% for a home loan. It means the cost of borrowing for businesses goes up, which slows down hiring and wages. It means the government has to spend more of your tax dollars just to pay the interest on the national debt, leaving less money for infrastructure, schools, or the military. Eventually, the Federal Reserve might be forced to step in and print money to buy the debt that China won't buy. That is the nightmare scenario. That is yield curve control. If they do that, it unleashes inflation like we haven't seen since the 1970s, maybe worse. The standard of living in the US would drop. Imports would become incredibly expensive. The end of America is really the end of cheap America. It is the transition to a harder, more expensive reality. However, here on George Vance Live, we believe in looking at both sides of the coin. This isn't just a disaster for the US. It's a dangerous game for China, too. It is a rug pull, but the rug is very heavy. China still owns hundreds of billions of dollars. If they sell too fast, they crash the value of their own remaining holdings. They would be burning their own money. Also, China's economy is currently in a very fragile state. They have a massive real estate crisis, high youth unemployment, and a slowing manufacturing sector. They rely on selling goods to the US consumer. If they crash the US economy, they kill their best customer. It is a situation of mutually assured destruction, financial style. Neither side wants to blow up the world, but both sides are preparing for the possibility. China is trying to slowly bleed the US rather than kill it overnight. They are trying to diversify away without triggering a panic. But the market is smart. The market sees the selling, and the market is getting nervous. We also have to mention the other elephant in the room, Japan. Japan is actually the largest holder of US debt, slightly more than China. But Japan is in trouble too. Their currency, the yen, has been weak. To prop up the yen, Japan has also had to sell US Treasuries. This is the double whammy scenario. If China is selling for geopolitical reasons, and Japan is selling for survival reasons, who is left to buy? This is a supply crisis. The US Treasury is issuing record amounts of debt at the vacuums are filled by volatility. We are seeing cracks in the bond market that we haven't seen in decades. This is why you see renowned investors warning about a debt spiral. So this all sounds very heavy, and it is. But the goal of George Vance Live isn't to scare you. It is to prepare you. If we are entering a period of de-dollarization and higher inflation, the old rules of money might not work. The 60-40 portfolio, 60% to stocks, 40% bonds, might be dead. Why hold 40% of your money in bonds if the biggest nations on earth are selling them? Smart money is doing exactly what China is doing, diversifying. They are looking at hard assets, real estate, commodities, Bitcoin, and yes, gold. Assets that cannot be printed by a central bank and cannot be debased by government debt. You also need to pay attention to your own debt. In a world where interest rates are structurally higher, variable rate debt is dangerous. If you have credit card debt or variable loans, the priority should be paying those down. The era of free money is over. Cash flow is king again. To wrap this up, the China dump is more than just a financial trend. It is a signal. It is a signal that the post-World War II order is fracturing. The world is splitting into two blocks, the West and the East, the US dollar bloc and the BRICS bloc. China has decided that they no longer want to fund the American way of life. They are taking their ball and going home. This leaves the United States with a very difficult choice. Either we get our spending under control and balance our budget, which seems politically impossible, or we print the money and devalue the currency. The Treasury market is the foundation of the entire global economy. When it cracks, everything shakes. The stock market, the housing market, your retirement account, it's all built on top of US debt. China is slowly pulling the foundation stones out one by one. It might not collapse tomorrow, it might not collapse next month. But the structure is getting weaker every single day. This is a story that is going to develop over the next decade, and it will define the financial future of our country. We are going to keep watching the bond yields, the gold purchases, and the central bank flows so you don't have to. I want to hear from you in the comments below. Do you think China will eventually dump all of its US debt? And if they do, what do you think happens to the US economy? Let me know your theories. I read through the comments to see what you guys are thinking. If you found this video helpful, please give it a thumbs up. It really helps the algorithm show this critical information to more people. Share this with anyone who thinks the economy is going back to normal, because they need to see this. And finally, if you haven't already, make sure you are subscribed to George Vance Live. We are your partner in navigating this new financial world. Thanks for watching. Stay safe and keep your eyes on the data. I'll see you in the next video.